Hi, what's up? Tim Sykes here. Get excited for this video that we're posting here. It's like 5 a.m. here. The sun is just coming up. I just pulled an all-nighter specifically to tune into this webinar from Tim Grittani. He's my top trading challenge student turned master. He's now, I think, over 15 million if, these numbers add up. I'm trying to keep up with him. I know he was over 13 million, but in this webinar that you're about to watch, he talks about how he's already made 1.6 million in just the first few weeks of 2022, missed a lot of the best plays. He goes over the wins and the losses, the mistakes. He's been a little rusty because he's like full-time dad mode now, but he still made apparently $1 million last year too. This guy, there's so much to learn from him. So watch this webinar. Mind you, this is just the first 30 minutes of the webinar. You have to click the link below if you want the whole webinar. It's only for challenge students. And challenge students, in case you don't know, they get 2, 3, sometimes 4 live webinars per week. Not just from me, but also people like Tim Grittani, a lot of my upcoming millionaire students, a lot of my 6-figure students are now giving webinars. We're a great community. It's not just about the money, it's about the knowledge, but the money is a result of enough knowledge and planning. So I hope you enjoy this. Leave a comment actually below this video when you watch this 30-minute section from Grittani's webinar. Let me know if you want more. We can post some more snippets. If you're already a challenge student, watch all of this webinar. It's on Profitly. And Tim Grittani has 70 plus archive webinars. And now I think we have like 2,000 archive total webinars. You don't have to watch them all, but the more that you watch, the more that you study, the better prepared you'll be. A lot of people think like, oh, Tim Grittani turning $1,500 of his own money now into, what, 15 million? It sounds impossible. Maybe he's lucky. There's like conspiracy theories that like he's a paid actor. He's not a paid actor. I didn't know him before he became my student. People were like, oh, you've been friends for life. No. He's a great guy. We're friends now, but he's done it trade by trade, starting small and scaling up. So pay attention to this webinar. Challenge students, watch all of his 70 webinars. Watch them multiple times. Watch Trading Tickers. Watch Trading Tickers Part 2. I know that there's a lot of information. We now have an option to learn for life. If you're, too crunched for time, you can email admin@timothysykes.com. Just put Lifetime Challenge in the title. My team will, give you all the details. This is a marathon, not a sprint. A lot of people want to make, 15 million or even 1 million or even 100,000, but you got to put in the time first studying. Remember, Tim Grittani made nothing his first 9 months. He only crossed 1 million 3 years in, and he was dedicated nonstop. So check this out. I don't know. I got to go to sleep. I pulled an all-nighter literally just to watch this. I'll also have a follow-up video with the lessons that I learned from Tim Grittani's webinar. I'm still learning. It doesn't matter, how much money you ever make or how experienced you are. You can always learn from other traders, and especially Tim Grittani. I can't encourage you enough to learn from him. Trading Tickers Part 2, in all 70 of his webinars. They're gold, okay? It's not just about the process, it's the mindset, and it's there's so much going on here. I don't know. Watch this. Click the link below if you want to join my challenge. You have to apply. And thank you, Tim Grittani. Thank Tim Grittani, too, in the comments below. Thank him for his time. He doesn't have to do this. He wasn't even feeling well. You'll hear him mute his mic a little bit in this. It's crazy that he's just doing this nonstop because he loves the community, and we're so grateful for him. And all you upcoming millionaire students, get inspired by Tim remaining humble. That's one of the main lessons that I noticed. He's been very successful. My arm is getting tired. But he's remained humble. So we're just going to be real with you. I'm filming a little video at 5 a.m. We're going to put Tim Grittani's webinar up there, the first 30 minutes. Again, challenge students, watch it all. Watch it repeatedly. If you're not in my challenge, get in my challenge. Click the link below. I now have 25 millionaire students. It's growing every month. It's kind of crazy. And, it's just a question of preparation meeting opportunity. There's so many plays right now. Most people are unprepared. I don't want that for you. I want you learning from this stuff. Even if you don't necessarily make a lot right away, even if you miss a few plays, you learn and you do better so that by year 2, year 3, year 4, you're better prepared. Good night. I got to go to sleep. Thank you again, Tim Grittani.
And to be honest, the last year and a half, I have traded very little. at least on my own. Like I've been doing a lot of work on like trying to automate trading and do algorithms and stuff like that so that, I could detach a bit and just let that do all the work. And that has turned out to be, a lot of work for not as much payoff as I had hoped, at least so far. It's crazy. Like, it's way harder to capture a strategy into that kind of like black and white computer code logic than I thought it would be. And I have a coder doing it all for me. It's more just defining the criteria where, I might have the algo trying to short a stock, and it's just weird because like I can look at it and see the play trigger and say like, oh man, like I don't like this one. Like I don't think this is going to turn out well. And it's sometimes like really hard to define why, like, and where that like intuition comes from. And then you think about all the things like even if you did pinpoint it, all the things you might have to start like capturing off of the chart with code to try to adjust for that and maybe account for it in the future. It becomes very overwhelming very quickly. So the algos, they actually had a decent week this week with all the oil stuff. But I started with that project probably a year and a half ago, and in that year and a half, they are up maybe 450K. So that is, by my standards, like if I were in front of the screen for a year and a half, I would expect to make more money than that. So the algos have a ways to go to catch up. And they, I should probably also mention that they were up way more than that at one point. So I've sat through like months of bleed off on them at points too, which has been really frustrating. So let's see what else. As far as my personal trading, I'll just update you guys on that really quick because I know I haven't really been doing a good job of uploading. So I've been very part time. My focus has been my family, my kids, doing stuff during the day with them, and when I do take trades, I've kind of had to adjust my style a little bit because I know I'm not going to be glued in front of it watching every single tick in most cases. So, if I try to I probably will even go over a couple of my trades from the past couple of weeks, and you guys will be like, "That's different than you would do it in trading tickers," and you're absolutely right, but it's kind of by necessity. So I want to say in 2021, with my really limited part-time trading, it was over $1 million a year. I don't think by much. I actually need to like get them all onto a spreadsheet and add it up, but it was still a 7-figure year, which I was happy about. And that's that's not including any of the algo stuff. I just kind of treat that as its own like by itself thing. I don't want. I just want them to be two separate entities, And this year so far, because of all of the oil craziness in the past 2 weeks. So far on the year this year, I'm up about 1.6 million, I think. And I'll definitely go over some of those trades because it really hasn't been that many trades. It's just been trades of size. That's part of it too, is that when I have decided to place the rare trade in the last year and a half, I've kind of been mentally working my way up to a point where I'm pushing size more and more and more. And I'll definitely get into that because there's definitely been ups and downs with that. So anyway, I think that mainly with this webinar, I'll just do some Q&A. I'm going to try to ignore questions that I know I've answered in other webinars, if it's like really super basic stuff. I'd like to try to talk about, like more new stuff. So if I skip over your question, I apologize, but trust me, it's most likely in a past webinar somewhere. And just because they're old webinars doesn't mean they're not worth listening to. So I'm going to just scroll back a little ways because I saw some people shooting me PMs as soon as I got into the room. And like questions, there's some questions here already about like specific stocks like Cala or PETZ. And I'll try to give those like quick answers, but so another thing is that like most of the time when I do like just kind of pop into the market, I'm pretty rarely opening a scanner these days. Like I'm more just kind of, maybe I can't remember how I usually figure out like what's hot and what's moving. I think I probably just usually see it on Twitter and get interested. But yeah, point is I'm not paying as much attention as I have in the past. So I'm going to be a little cautious with my answers about specific tickers. I don't want to go too in depth on something when I might not know entirely what I'm talking about. So let me just make sure I have not missed anything recent really quick, and then I will go back and catch up. Oh, and one more thing, since I am still kind of sick, like I'm gonna try to just like mute myself real quick if I think I'm gonna cough or anything like that, because I still do have a cough going a bit, so I don't want to like cough into the microphone because I've been told my coughs are pretty loud. Um, my my wife the other day was like, "Your cough is shaking the bed," so it's yeah, I got a big cough, guys. That's the secret to being a good trader. All right. I'm sipping honey tea too. Honey tea is good for the throat. Let's do this. Okay, so questions. First one I got was my thoughts on swinging KALA over the weekend. Kala. I did briefly have I think I just saw this one on Finviz today or something. I bought this brand new awesome computer that was supposed to help me with algos. It's like the most money I've ever spent on a computer. Try this again. Can you hear me? Is it gonna kick me off? It's not you guys, it's on my end. My laptop, it keeps saying like lack of resources and killing it. So now it says perfect streaming. My video quality is 480, so that kind of sucks. Sorry about that. Is the video like atrocious? I mean, I apologize that that's the case now. Maybe there's some way I can compensate for it. I think the solution is I just need to buy new computers. This is supposed to be like, I don't know, like the computer problems galore. All right, so I'm just gonna go ahead and okay, good. Video quality is doable. That's great. Okay, cool. So let's just get back to questions really quick. I apologize for that, and I'll try to keep an eye on chat in case that happens again. But hopefully my computer can handle things now. I'm gonna be all paranoid, double checking. You see StarCraft 2? Yeah, you do. Ha, that's funny. Yep, my little StarCraft icon where I go and get my ass beat by ducks every now and then. So yeah, back to questions. The first question was on KALA, and is this a trade that I would have taken over the weekend? Or yeah, would I've taken it over the weekend? So the breakout level here, huge volume day, high of 155. I did pop into Finviz randomly this afternoon and saw it on the scan. It was after the breakouts had happened. It was I want to say it was after this 170 dip. Like I saw it down like in the 140s, 150s. At that point, the breakout has occurred. It's having a pullback. It's not really all that unusual and scary for a breakout to go under the breakout level. So I was definitely like kind of thinking about it. And the one thing that stopped me was that I went and I checked share structure on this. And this might be as good a time as any to talk about dilution tracker. I also shouted these guys out in a tweet recently. It's such a quick, easy way to do fundamentals. It's there are still little issues here and there. I still recommend going to the filings directly, but something like dilution tracker where they mainly track lower market cap companies. So like you could put in something like Tesla and like it would not find Tesla because it doesn't. The goal is to find companies where dilution matters. But anyway, so I like to pop here too because they usually will have one of the most accurate float numbers, which is something I've always struggled to find in the past. So KALA, I saw the float was 49 million, outstanding shares 65 million, and again, this kind of just goes back to my part-time-ish mentality. But like these days, when I'm buying something, I want it to be really low float or really low share count. So like the market cap's really not that bad. 65 million shares and the price is 155 at the breakout level. That's under 100 million market cap. That's fine. That works for me. Quick double check. I'm still streaming. Sweet. Have not crashed yet. But just again, kind of in my little part-time state, I was like, I don't really want to buy a breakout where there's 45 million shares outstanding. I think that kind of limits the upside a bit. And so I just decided to pass on it. Now, whether I want to swing this over the weekend or not, that would depend on a number of things. Like, let's just assume that I play at, textbook trading ticker style where I buy the 155 breakout and, I've got my risk level, down in the 135, 136 area after the crack and it closes strong. It closes up near a high day. I mean, if I'm long a breakout and I see this daily chart, I'm taking that overnight. Like that is a no question in my mind kind of thing. Now it is gapping down currently after hours a little bit. That's not gonna. I mean, like I don't love to see that, but that's not gonna scare me out of the trade after hours. I'm not gonna be like, oh my gosh, I've got to get out. But the way I would personally handle that is just try to give it time to go, and the next morning, and hopefully in the morning it's gapping up, and if not, usually I just cut it out pretty quick. Unless there's some reason I have to think that they might do some kind of like shakeout and keep it going. And they do play that game a lot with the lower float stuff. I was long a big breakout on KAVL earlier this year, where I think I bought this like, it wasn't that breakout. It was really early. It was, I bought this little break past the 105 area. And, maybe it was like slightly undisciplined, but I did wind up holding through the gap down and little dip into the 90s on the 4th. And then once it reclaimed its trend, I started adding in and, really built into a winner once it started going in my favor. And I wish I could remember when I sold this exactly, but it was a while ago now. This was, early February. So my dad brain can't remember that far back anymore. But I know I sold it into the strength. I think I made over 300K on this trade. So, and then this was my first big win of the year. That's right, because my first two trades of the year were also like random, like kind of like breakout type stocks. Like I mostly only long these days when I am actually trading, and I tend to be a little more speculative with my starters, where I'll buy during consolidation, kind of in anticipation of the breakout. Which I know I have said in the past that's normally a no-no, but remember I'm kind of doing things a little differently now. But my first two trades of the year were losses. It was like minus 17K, minus 20K. So I was down like 37K at the end of January because I only made two trades all of January. And I was like slightly annoyed, but at the same time, like I'm not really going to panic because, I know I'm trying to push size and push risk a little bit. And when I do hit the ones that work, like KAVL, and I can add into the winner, I mean, one trade like went from negative 37K on the year to like plus 300K on the year. So like that, I'll take that risk reward. I will absolutely take that risk reward. Is kind of the point I'm trying to make. So sorry, I'm getting sidetracked already. Back to questions. On a chart like PETZ, where there's a huge drop day, what do you use as resistance on a day like that? My resistance comes to daily. Oh, so like something like this, the big probably offering or bad news of some sort. I mean, yeah, something obviously horrible happened here. So where would I use as resistance? I mean, if you ask me on the day of the drop, probably just the top of this level, like 350th, 364 was this high. But then as you go along and kind of have these days where it's fading off, I mean, volume was pretty consistently high on a lot of these days. But I probably start to focus in more on, the lows down here and look for some kind of like big rebound attempt that fails. And I don't see anything here that's like picture perfect to me or would really excite me as a resistance level. Let me resume that because I messed it up. I mean, one of the biggest volume days I see here is on March 9th, where it topped out just under 42 cents. So, I mean, maybe I could make a case for trying to play a breakout past this 42 area. But I mean, the longer it consolidates on the daily, this is a hard one to judge. I mean, maybe I just go with this. Like, this is one of the biggest little rebound attempts the chart had, up to 56.45. But really kind of like breaking out of the daily consolidation really low is what I'd be looking for. Chances are what's going to wind up happening with this is there'll be some random day where there's news and it pops up into the 50s or something, and there's like some really standout volume bar of like 150 million or 200 million shares. And then that'll be like a no questions asked, that's my resistance. And I wouldn't really think there's another resistance level until like well overhead in like this 4-ish area. So I'd be like very willing to buy a breakout or something like that. But for now, the chart is not really where I need it to be all that interested. Have I done more research on my first green day pattern? So like after the tanks and then it turns around and rebounds. I updated that tracker once, like last fall. And I can't really remember. I think it was just kind of like holding steady to a lot of the stats that I outlined in Trading Tickers too. I have not looked at it again recently though, and that actually I really should, because that's one that I should automate. I don't have very many good long strategies, and I've struggled with automating long strategies, but that one is fairly straightforward. And I remember thinking about tackling that like way back when I first started the whole like automation process. And at the time, we were a little limited by like some of our inexperience, my coder friend and I. But it would be very possible now. So I don't know when I'll get around to my next webinar after this, but that's something I mean, I'm going to be forced to look more into it. But yeah, I guess I did, though, to answer your question, I did look at it again, 6 months after I released Trading Tickers 2, or more like 8 months. And yeah, things seem to be holding pretty consistent to what I talked about. I mentioned Scripts to Trade on Twitter. How did I find that helps? Yeah, okay, so let's see, what example should I talk about? Okay, this is good. I like this one. Indo versus IMPP. So Indo was, I had that KVL trade, which was like near a record trade at the beginning of the year. And I had another trade on INDO. I think I was in chat the day that I bought it pre-market on the 4th and sold it up into the 44 area. And I made 150K on that trade. But before that, I was long this thing from like 12 or 13, and I sold it in the 20s, and I had 5 times as much size, and I made 450K. So first of all, ouch for not holding those shares into the 40s and beyond, but no, like, hard to complain with the record trade, and that was a scary dump it did on the 3rd at the end of the day that finally shook me out. But let's go to March 2nd here, because I can give a good visual example. I just need to remember what level I was looking at. So basically, Scripts to Trade, there's a tool they have called Anchored VWAP. And the way Anchored VWAP works is that, like, let's just say I look at like a 5-day, 5-minute chart on INDO here, and I've got VWAP on my screen, on my chart. This is just normal VWAP. You might notice that like every day the VWAP resets. Like, it takes every day is like a fresh start. So here on the 8th, the end of the day, the VWAP closed up at 48.36 after all the after hours action. And then the next morning, the stock gapped down big into the 36s, and the VWAP immediately resets. It comes down to the 36s. It treats it as like a new day, and any VWAP we're looking at on the 9th is just the VWAP on the 9th. It takes into account nothing from before this. But as a trader, if I'm looking at something like INDO or any chart really, I mean, I think shorts from the previous day might matter. I think longs from the previous day might matter. Like, if I'm trying to think about, is a stock overall holding above or below trend, and where might everyone overall be on this trade? So Anchored VWAP is supposed to solve that problem. So let's go back to the daily here for a second, as this thing was really starting to break out. And it was really up in here. We had all this choppiness in the 10 to 15 area. So I like to take Anchored VWAP from the day the high was set, because let's just assume that anyone trying to short INDO is smart enough to wait until the high a day, and it's a red day. There's nobody twisted from back in the 4s, 5s, 6s, whatever, which might not be a realistic assumption, but I'm just kind of giving everyone the benefit of the doubt. Everyone's trading really well. So at what point are these shorts from the 28th going to be in trouble? So what I do is studies, edit studies, and here's their little Anchored VWAP study. And I'm going to hope that I'm remembering my date right here. I think it was the 28th I said. But I can set it back to start tracking the VWAP from the 28th at 4 a.m., so pre-market, the very start of this day that it was gapping up. That was not right. It was the 20... Oh, no, it was the 28th. Okay. Oh, but I need to edit something really quick on it, just so it shows up better. It'll be a blue. I like the bright blue line. Okay, so then I need to see an intraday chart of this. So let's just look at it from the 28th to the 2nd. So, okay, I'm going to get back to a chart here. Let's go to March 2nd. end of the day, and let's look at a 5-minute chart. So, here's the day I was talking about where we gapped up. Oh, this actually would have been a better day to use. I think this is probably what I was using actually, because it went up to 20 pre-market a couple days before that. So that really was more like the real high. So let's say this was the 24th. So I'm going to change my study really quick to the 24th. At 4 a.m. So this blue line is continuous VWAP. It doesn't reset at the start of every single day. And for me, on the day where I wound up buying this, even though it was below the breakout level, I think a big draw for me was the fact that, well, there were a couple things going along with it. One was the fact that I really did like that it was above that VWAP level. Let's go back to, I can't remember which one I was using now. Let's go back to the 28th. I think that one shows it better. And this is part of the thing I do with this still is I play with it. I'll look at it on different days and what's the level. Oh yeah, okay, it was the 20th I was using. The day it had the high during regular market hours because, still little volume trade back here. So the most recent high, the 28th during regular market hours. And pretty much ever since pre-market and this little surge that failed on the day that high was set, it had held under. It had been under this multi-day VWAP level. So anyone who shorted this day could still, well, not anyone, but the average seller from this day is still comfortable and still profitable on their trade. And it's holding under, and it was like gap and fade on this day. A previous big gap day was gap and fade. And then all of a sudden on this day right here, there was a gap up. It closed down in the 10s, 11s, and then gapped up on the second into the 12s. So it gapped up and it was fading. It looked like its typical gap and fade pattern. But then it starts to build back and it's kind of consolidating. And I really liked the fact that it had this 12 crack here and then saved itself. So that kind of to me was like, okay, that's kind of weird. Like that seems like a little bit of a deviation that didn't fade off there and it actually did hold the round number. So I think I started accumulating down here, took my starter, my early starter, which, again, I'm just kind of adjusting on the fly here. And when I take these early starters, it's the mentality of the building in isn't like, oh, I'm only going to risk, half my risk. Like I call it a starter because I know my goal is to add later as it's working. So when I take my position in here and I'm risking off a low a day, I know that if I cut it low a day, I'm taking a full size loss. Like I'm still sizing in like that, like I talk about in trading tickers too. So it's more of like the difference in language and calling it a starter is just knowing that I am going to absolutely add to a winner as this goes. And the really big trigger for me that said, okay, this thing is going to go. And there were just like so many things working perfectly at the same time. This is really close to a multi-day breakout level. This is breaking past this anchored VWAP level from back on the day that the high was set. I don't buy the little first perk through or second perk through. Like the little perks and fails through anchored VWAP are very common to see. So I really don't get excited until you have a couple perks through the level, or like even if it was just one perk through the level and then consolidation near it, and then the breakthrough. Like the breakthrough this high right here where the perk failed is like what I like and what gets me excited. So this was like a big ad spot for me because it's changing its pattern of gap up and fade. Like this is strong. This is afternoon, and this is the first time that we've seen it gap up, fade a bit, and then get strong and be resilient and recover. And now it's also putting the average short seller from the day the high day was set underwater. So now I know that the average short is twisted if there is somebody still long-term short this thing. And I know we're right near a breakout level in an environment where there's a lot of fear about oil and oil prices are going up. And this is an oil stock. Like it was like the stars aligned. So I was like, I think there's a great chance this could gap up. Because I had averaged into my position like I did and added along the way and added on this break to my starter, I got up to 50,000 shares. I had an average in like the 1260s. So when this thing is closing up in the 14s, I have cushion overnight, which is huge. That makes it so much easier to be comfortable with size overnight. And I think, just one other thing I have to touch on here because this is, Also really important to why did I love this trade so much. Let's talk about dilution tracker again, INDO. INDO, I could see the float was only 1.91 million shares. One of the nice things that dilution tracker does is it will tell you things like, what's the overall risk on this for dilution? Well, it's low. And you can go through and kind of figure out why. Like now they have a really high offering ability. At the time, they didn't. At the time, they did not have this. They did not really have access to this January 2021 shelf. There were some rules in place because of their market cap and how low it was. Like if they could do an offering, it would have to be like such a minuscule, small amount offering. There was really no offering risk. I could go to dilution tracker, I could check that, I could see that. And I could also see, there aren't a bunch of warrants outstanding. There aren't a bunch of convertible notes outstanding. There's not like a bunch of stock waiting to be dumped into this as it goes higher. And let me just show you an example of one. This looks like CEI. This is what it looks like when you can kind of see like, oh, there's a lot of dilution present that could just get dropped at you at any second. Like these little blue bars, the dark blue bars, are how many shares are outstanding. But all of this stuff on top of it is stuff that could be converted at like any time. And you can scroll down and kind of look through and see the details of the warrants or the notes or all that stuff. So this has been an incredibly useful tool to me to do really fast fundamental research. And again, there's some risk in assuming it's always right. You could always go to the filings and confirm yourself. I actually have managed to learn a little bit about how float is calculated through these guys. You can kind of reverse engineer their float number and figure out how they got there by looking at the filings. But yeah, so INDO, like I said, stars aligned, like low float, super low dilution risk, hot sector. Anyone average short seller is probably twisted right near a breakout level. So it was easy to take this thing overnight. I got a really big gap up. I really, really thought it was going to be like gap up, blow off top. So I was disappointed when the next day was as weak as it was and kind of as consolidated as it was. We had a lot of chopping around. I'll just go to a intraday chart of it really quick. We had a lot of chopping around in here. I did pay myself some into the 24s just because I didn't want to be like a total pig and be super greedy about it. But this dump end of day under the day's view app, this was a pretty significant crack, and this scared me out because not only is it having this big yank here and cracking under view app and cracking under this support that it held for a couple hours, but at the same time oil prices were dumping. I was watching the crude index, like /CL is what it is on here, and yeah, oil was getting smoked. So at the time with what the this isn't as smoked as I remember it being, but I don't know whatever did. Maybe that was a different day where the crude got smoked. But point being, I got scared by this dump, and I got out into the 21s. I think is where I sold pretty much all of my shares, aside from the ones I took off in the 24s. And then yeah, when it surprised me the next morning with the gap up, I built back in because I still thought huge squeeze possible. This could be this seemed to me like it's going to be the black swan stock of the sector. Now, one more thing I was doing on this day, because, at this point, we're already up from, this consolidated in the 10s, 11s, 12s, and we're up into the 25 area. So, yeah, it's already been good, but it hasn't been like black swan crazy. And when it was holding, before it had that afternoon crack midday, I was thinking about what are other stocks in this sector?